Congratulations to those of you guys in the trading community that bagged this 10xer with us today playing your cannabis stocks. Over a 1,000% return, $120 into $1,200. If you guys would like to come trade with us live in real time, check out that link down below in the description of this video. But neither here or there, today was a pretty rough day for broader markets, and included in that, a pretty rough day for Tesla stock. I have some good news for you in this video about tomorrow's Fed meeting, and I'll share it with you in just a moment. But first, we need to go over the earnings that just came out, because they are also going to have a big effect on markets over the next 24 hours. Your big earnings include Amazon, Supermicro, and AMD. AWS beat by about $500 million. The problem area with Amazon is they expect revenue of $144 to $149 billion, representing growth of 7 to 11%. Analysts were expecting growth of 12% to $150.1 billion. So a little bit of a guide down even on the high end for next quarter. Still, Amazon is up 3% here in after hours. The Nasdaq is still down 0.25% here in after hours. Apple is a big drag on the headline right now. The stock is down about 0.5% in after hours. Really just tanked towards the end of the day today for seemingly no real reason at all. You also had SMCI as well as AMD earnings. AMD is down 3% in after hours following their earnings, and SMCI is down about 2%. SMCI missed on the current quarter, but guided up big time for next quarter. So I think that's just gonna be volatile, but not really a big up move, not really a big down move. Same was kind of true for AMD, some bright spots, some not so bright spots. And overall, I think the stock down about 3% is probably where we're going to stay. So the AI trade is taking a little bit of a breather here in after hours, but I don't think it's over with. You also have Nvidia down almost 0.5% in after hours, so a drag on the AI stock nonetheless, but not a huge collapse. It could have been worse. Tesla stock is down about 0.6% here in after hours following all of these earnings. You did also have a big miss from Starbucks, and Starbucks is down almost 10% as well. So more down stocks than up stocks. Amazon's not strong enough to save the day. SMCI and AMD didn't exactly do fantastic either for this current quarter. Guidance came in good for SMCI. AMD was a little bit more mixed. Overall, I think this creates a lot more importance for tomorrow's Jerome Powell Day. We need to get into that, and we need to talk about that, because that will be huge. So first things first, tomorrow morning before Fed Jerome Powell, we will have some data. We will have the ISM manufacturing PMIs. You're expecting this will come in around 49.9, so enter back into contractionary after last month's PMI's readings went positive for the first time in a long time. Last month they were at 50.3, expecting a slight down move again to 49.9. I think the weaker this comes in, the more excuse Jerome Powell has to start cutting rates sooner. Now, JOLTS job openings will be coming out as well at 10 o'clock in the morning. I should mention ISM manufacturing PMIs also come out at 10 o'clock in the morning Eastern Standard Time tomorrow. You're expecting 8.68 million job openings. That would be down from 8.75 million job openings last month. So that would be a decline of about 100,000 job openings, give or take. And the best way to think about this is the more job openings, the better the economy likely is. The less job openings, the weaker the economy likely is. A company or a business does not look to hire employees when times are bad. So if you get a big drop tomorrow, that's a sign maybe the economy is not as strong as we think. If it rises a lot tomorrow, then the economy's probably doing okay. So that's your big data before Jerome Powell tomorrow. You will also get JOLTS job quits. ISM manufacturing prices, that's going to be an important part of this as well. Last month came in at 55.8. The estimate is 53. The lower this number comes in, the better, because that's telling you, hey, how was manufacturing prices last month? Meaning if they're high, then that's pretty inflationary. If they're low, that's pretty deflationary, and also ISM manufacturing new orders will also be coming out. All of that data comes out at 10 o'clock in the morning. Now, tomorrow's Fed meeting, there's two different ways that I want you guys to think about this. Number one, there's the balance sheet. And number two, there's Fed policy. So let's start with the balance sheet. The Fed is currently running off about $60 billion a month in treasuries off of their balance sheet, and they're running about $30 billion a month off of their balance sheet in mortgage-backed securities. Don't even think about mortgage-backed securities. That doesn't matter too much. Not for equity markets, that is. Treasuries is the whole shebang. That's the important part. Now, I don't know if the Fed is going to announce like, hey, we're going to start this meeting, right? Reducing the amount they're rolling off each month. Or if they're going to say in the next meeting they're going to. So semantics doesn't really matter too much. But we will have a better understanding of what that number is. Is it going to fall to $30 billion a month in treasuries, $15 billion a month in mortgage-backed securities? Is it going to fall to, $20 billion a month? How much is going to be reduced? And I think that will be very important for markets. Now, the news that we got yesterday that sent the markets lower towards the end of the day was that the Treasury was going to issue or sell about $41 billion more in debt than we thought for this current quarter. Think about it like this. If the Fed reduces the pace of their balance sheet runoff from $60 billion a month on treasuries to $20 billion a month in treasuries, that is essentially covering that excess raising of debt that the Treasury is doing. So the Fed has been a source of selling pressure or supply in the bond market, and the Treasury has been a huge source of supply or selling pressure in the Treasury market. Now, when there's a lot of selling pressure, not enough buying pressure, what happens for TLT? Well, TLT falls. Okay, and that's what TLT has been doing. If you look at the weekly candlestick chart, it's been falling for years. When TLT falls, yields rise. And that's why 10-year Treasury yields are where they are today, up 7 basis points to 4.68%. So the more drastic the reduction is in their runoff of the balance sheet, the better off markets will react to that. It's kind of like a stimulus or maybe less restriction on the bond market and less of an upside pressure to 10-year Treasury yields, which could be really good for small cap stocks. But then again, we don't know what that number is going to be. It could only fall to $50 billion a month. It could only fall to $40 billion a month. But I will say the Fed is kind of being forced into this because if you look at excess liquidity in the banking sector, because the banks are the ones that really buy up these Treasury auctions, it's sitting at about $534 billion. It did hit a low of about $327 billion from over $2 trillion back in 2023. So the excess liquidity or excess reserves are running out in our system, and that's why the Fed has to make this change to the pace of the balance sheet reduction. So it's not like something the Fed necessarily probably wants to do. It's something they have to do to prevent a crisis at some point down the line in the banking system and in the Treasury system. Now, the second aspect to the Fed tomorrow, I think, is probably more important to Tesla. I say that tentatively because the balance sheet reduction is a huge deal. But again, we just don't know what the change is going to be. So it could be a huge deal. It could be a bit of a nothing burger. We just don't know. But I think when you mix these two things together, it becomes very bullish for Tesla stock coming tomorrow. So the Fed policy situation. This is the first time in a long time the markets are pricing in less cuts than the Fed itself. In fact, today, with the 7 basis point move higher in the 10-year Treasury, you're now pricing in your first rate cut in December of this year. December 18th, 2024. You're no longer pricing in a cut in September nor November. So just this week alone, you've went from pricing in the first cut to September. You totally skipped past November and you went straight to December. Now, I'll give you the bear case for the Fed tomorrow. The bear case for the Fed tomorrow is no cuts in 2024. I think that's not as terrible because, I mean, we're expecting the first cut from the Fed in December 18th, 2024. So big deal if the Fed plans to cut in January of 2025. Whoop-de-doo. I don't think that's a huge deal for markets at this point. Psychologically, maybe. The real bear case where stocks can get clapped big time is if the Fed starts to throw around maybe they need to raise rates again. I am exceptionally bullish on tomorrow because I don't think the Fed is going to say they may need to raise rates again. I think the Fed's going to stick with kind of what they've been saying. They plan to reduce rates coming this year. They expected the path to getting inflation down to 2% will be bumpy, and well, it's starting to be bumpy. But I think the Fed's still going to forecast multiple rate cuts, at least 2 in 2024. Now, we're not going to get a new summary of economic projections, but the last summary we got, the Fed was expecting 3 cuts in 2024. Most Fed officials were expecting 2. I don't think that changed all too much. In fact, you could even make the argument if the Fed is more focused on the business cycle, you've actually seen weaker economic data come out recently, which could suggest the Fed may have a reason to now start reducing rates. Think about that stagflationary data that we even just got today, let alone the quarter-over-quarter GDP numbers we got last week. They came in 1% lower than expected. Stagflation, by definition, is stagnant growth, high inflation. Well, if the Fed believes the inflation is going to continue to fall, but you are seeing a stagflationary economy, an economy that is getting worse now, you can make the argument the Fed may focus on the economy and keeping the economy from entering into a recession rather than focus on this bump in inflation. That's the more optimistic view, and probably the view that makes the most sense. I've said this since the start of 2024. It appears like the Fed has been begging for a reason to start cutting rates. And if you think about this logically, with 10-year Treasury yields at almost 4.7%, there is a lot of excess restriction on our markets. I think the Fed could afford to come out and be somewhat dovish tomorrow and drop 10-year Treasury yields and still be at a very restrictive place, right? I think even if the Fed comes out very dovish, 10-year Treasury yields fall 25 basis points, you're still going to be sitting, at 4.4%, 4.45% on the 10-year Treasury. That's still pretty dang high if you started 2024 at 3.8% on the 10-year Treasury. So I think from that perspective, markets are expecting a super hawkish Fed, and I think we're going to get a Fed that's been kind of the same old, same old. I don't think you're going to get a big policy change coming tomorrow. If I'm wrong, I'm wrong, and stocks get destroyed. But if I'm right, stocks can rally big time. And that's what I think is the exceptionally bullish part about tomorrow is the same old from the Fed. The Fed literally needs to change nothing from the last Fed meeting, and that would be seen as very bullish for markets because now you're only expecting 1 cut, whereas last Fed meeting we were still expecting 3 cuts. I think it's pretty straightforward and simple there, right? Now, if you add the balance sheet reduction and that news on top of it, I think that could be a very bullish recipe for Tesla stock. Now, what areas of the markets am I bullish on coming tomorrow? Now, I'll just be fully open and honest and transparent with you guys. I do have a trade on IWM coming tomorrow. This is not a recommendation. Do not trade this. You will probably lose all of your money. IWM is down another about 0.2% in after hours as well. So probably should have waited a little bit on this trade, but nonetheless, I did not. I bought 10 IWM 205 calls expiring next Friday for $33 a piece. I'm down $120. I'm down 27%. Now, the reason I made this trade was to kind of offset some of the other trades that were made today, like that 1,000% 10xer in the cannabis sector, as I showed in the beginning of this video. But I do think if there is going to be some outsized upside tomorrow, I think it can be in stocks like Tesla. He keeps turning off the light. Stocks like Tesla or your small cap stocks that have really gotten beaten down in 2024 based on less cuts or almost no cuts from the Fed in 2024. And again, I think this Fed meeting is a little bit different than others because you're one so bearish heading into it, right? And the Fed actually has gotten bad economic data. Even CB consumer confidence today came in well below expectations. I mean, Look at Starbucks. Look at some company earnings, like even a McDonald's. People are cutting back, and especially that quarter-over-quarter GDP number that came in 1% lower than expectations. The Fed really hasn't had bad data before heading into a Fed meeting. Now, tomorrow morning, keep in mind, ISM manufacturing PMIs come out and JOLTS job openings. JOLTS job openings is a little bit more important to kind of judge the state of the labor market and the economy. But there is actually a reason now for the Fed to start cutting rates sooner rather than later. Again, especially considering 10-year treasury yields just continue to go higher, and that's putting more real restraint or restriction on the economy. Keep in mind, when the Fed raises rates, all they do is they raise rates for the borrowing rate between banks. So if JP Morgan needs money from Citi to cover whatever expense overnight, who cares? That's the federal funds rate. That's what banks have to pay each other for, a full year. If JP Morgan held Citi's money, they would have to pay them 5.25%, right? It's the borrowing rate between banks. Has nothing to do with anything else. What's happened is the 10-year treasury yield is what mortgages are dependent on. That's what, dictates where rates actually are in the real economy. So pay less attention to what the Fed funds rate is, pay more attention to what the 10-year treasury yield is doing, because the 10-year treasury yield is direct restriction on the economy. And you have seen a lot more restriction come onto the economy even since the last Fed meeting. Now, I want to be a little bit careful just throwing out speculations on where I think, Tesla can go. And if you know me, I'm going to explain where I think Tesla can go by the end of this week, because I am bullish. Keep in mind my bias here. I could be wrong. And if you look at SMCI right now, it's down 8%. If you look at Nvidia, it's down 1% in after hours. AMD is down 4.5%. Things are not pretty in the semiconductor industry, especially as these conference calls are getting started. The selling is getting worse. And you can see Tesla is now down about 1%. The NASDAQ down about 0.25%. Amazon's still holding up its 3% gain. Apple's still down 0.25%. So things are not great out there. But I do, again, think the Fed is going to be a massive catalyst for markets coming tomorrow. And I do think it will be a positive catalyst for Tesla. Now, I will tell you, in a downside scenario, watch that 180 level, that 181 level. You're there now in after hours. You're at $181.50 per share. That's a very important level. If you hold support there, great. If you don't, your 50-day moving average is coming next around 175. I will be surprised if markets sell off again coming tomorrow after the Fed. As I explained yesterday, if stocks sell off into the Fed, I want to be bullish on that. That was the overall thesis of the Fed this Wednesday. If stocks sell off, buy calls. If stocks rally into the Fed, buy puts. So stocks are selling off into the Fed. I still want to buy calls. I still want to have upside exposure, maybe not literally buy calls. I did anyways, but maybe that's not the best strategy for you. Contact a financial advisor. I am not one, so don't listen to me. And if you ever see a trade here on this channel, consider it is going to be a 100% loss if you copy the trade. But I do think the risk reward is definitely skewed towards the upside now heading into tomorrow. So I'm pretty optimistic. I think Tesla stock can get back to that 100-day moving average by the end of this week around 197.97. That would be pushing almost $200 per share again. And I want to point out, just again, Tesla stock was down 5.5% today, including 1% in after hours, about 6.5% today, even though you had positive news for Tesla, good vehicle weekly insurance registration numbers out of China, as well as that deal for that huge Megapack facility. I mean, there was a lot of good news today. There wasn't any bad news for Tesla. It's just Tesla's going to be a lot more volatile now that you've went up a lot. I expect to fall a lot. I expect to go up a lot again. It's just going to be very volatile back and forth. And I mean, a lot of you guys don't listen to Jim Cramer, and rightfully so, right? But check out what he just said about Tesla stock and about shorts essentially getting screwed.
Elon Musk pulled a rabbit out of a hat. He wasn't able to find that rabbit in time for the quarter, but he bagged a terrific one this weekend when he got permission to sell a subscription-based derivative of full self-driving for the Tesla in China, which gives him a whole new revenue stream, a big one. That can go a long way to restore price momentum after vicious price cutting in China. Just as important as how Musk got it. He made a surprise trip to China, met with Premier Li, and nailed down a deal with Baidu, the Google of China, that allows us to have the best maps available. This is unbelievable. And it's also a perfect example of a CEO redefining the narrative. There have been a feeling that Musk had gotten so, they had so much going on that he hadn't been paying attention to Tesla. Now here he is doing something no American CEO can do. Just get on a plane and make a deal with a leader of a country that our government isn't particularly fond of. I can't think of anything similar in the annals of American business, except maybe when Arm& Hammer went to the Soviet Union during the Russian Civil War and became Lenin's chosen capitalist. At the time, there were U.S. troops in Russia fighting against the communists, and this guy still made a fortune negotiating with Lenin. Of course, I don't put Xi Jinping in the same category as Lenin, but he's still much more, he's a little more friendlier. But Hammer's the only other executive I can remember who could make a surprise trip to a hostile country and come back with an extremely lucrative deal. That said, it's not a magical elixir for Tesla. It's not full self-driving. Competition remains stiff. But let's face it, no one else can pull this off, which is why shareholders love the guy and bid the stock up so much, making fools of last week's downgraders. It's almost as if that Musk had leverage over the regime. Hey, maybe he does. Maybe they're just as dazzled by him as everyone else. Either way, it's made people a lot of money. Will Tesla the move have staying power? Look, plenty of people shorted the stock, betting that they could finally break the darn thing. They failed. The stock can keep running until the shorts are all crushed.
So yeah, I think tomorrow, if I'm correct about the Fed, that's going to be another big catalyst for Tesla to continue to crush the shorts that are remaining in their outsized short positions. If you take a look at the good old Ortex data for the day today, you do have a current short position of 3.84% of free float, 106.56 million shares currently out on loan, and short sellers have taken a massive beating. The dollar amount that was sold short on April 23rd was 15.56 billion. Today it's 20.68 billion. So shorts are still down about $5 billion just within the last couple of trading days. That's a bad position to be in, especially with a narrative around a company like Tesla that has totally shifted. Shifted away from a CEO that's working against the company, that is doing what seemed like everything to destroy shareholder value. And now Elon is getting on a plane, striking deals in China, like Jim Cramer said, with little to no effort from our perspective, right? And it seems like everything is starting to turn around for Tesla. Do you really want to be short that stock? Probably not. Only about 1 million shares have actually been covered since, this $5 billion loss incurred. And I think you get one more good move to the upside, break out to new, highs of this rally, and you're going to see a lot more shorts start to cover on short positions. Another reason why I'm super bullish on Tesla right now still is retail is not that bullish on Tesla. Over on StockTwits, the sentiment yesterday was 33. That was bearish. Today it's 44. That is still bearish. But even on a day that was Tesla's best day in 3 years, retail was still very bearish on the stock. And I think until you get retail that is bullish on the stock does trend higher. But again, it's going to be volatile to the upside, to the downside. Expect big up days and expect big down days. Probably a good market to sell some premium if I were to say so myself. And now you have Amazon selling down a little bit more in after hours. Now down up still about 1.5%, but down about 1.5% from where we started this video. So it's a wild card. Anything can happen here in the next 24 hours. Let me know what you think about all of this down below in the comment section. Are you bullish? Are you bearish? How are you feeling about Tesla stock right now and even the broader markets? Are you buying puts? Are you buying calls? How do you feel about the Fed? Let me know all of that information down below in the comment section. And if you guys want to come trade with us live in real time every time we make trades, check out that link down below in the description of this video. Enjoy the rest of your day, and I will see you in the next one.